Hi everyone, welcome back to Be Rich. It's me, Vinod, recording remotely from Bangalore yet again. Sitting in the car this time again. And a lot of you wondering what kind of a car is this? Or the windows are so large, it is actually a Kia Carros. That's the car I'm sitting on. And in Bangalore traffic, if I start moving around, and it take some time by the time I get to the studio here in Bangalore and get the video recorded and to you guys, might take time and I might miss the window. So I want to take this opportunity right now to record and upload it and then get into my work. Otherwise, I might miss the opportunity. So that said, we had some interesting questions from yesterday's video, which I wanted to first get to answering. Naveen, Kumar, and Krishnan 3 are asking how to buy Japanese stocks and ETFs from India. Any apps? Well, I use IBKR, and IBKR, the platform which Anand also uses. So you can look at IBKR, and we buy actually not Japanese stocks, we buy Japanese stocks in the United States, so which are listed in the NASDAQ or in Dow Jones. We look at those stocks, and that's the way we look by these Japanese companies. These are big Japanese companies which are traded as over-the-counter stocks, OTCs, or they're traded as ADRs. ADRs are more liquid, so I suggest you stay in ADRs unless you know what you're doing. But then again, make sure you study it and understand it and then venture out in it. Don't blindly just do it without really investigating it, because there is a lot of nuances in this, just not based on a YouTube video. So Jit C5L is asking, why should we be optimistic about Japanese economy now? How to evaluate fundamentals of Japanese stock? Well, we're not investing in Japan the country. So we are looking at huge Japanese companies which are very old, which are debt-free, which have a lot of cash, and they export a lot of high-end equipment, or their services are all over the world and revenue comes back to them, to Japan. So that is the strategy we're looking at. In terms of evaluating fundamentals, we use the same method as any other Indian stock or American stock. We look at the earnings, we look at where the price is right now, we look at debt, and we study the balance sheet, we study the moat. So it all pretty much fundamentally the same. That's why those of you who are upset that I'm not talking about Indian stocks, it shouldn't be. What I'm talking about is the principles of analysis on how to investigate and invest. And that applies to any market, any stock. So keep that in mind. Kotanandram 81. What fundamentals make these Japanese stocks as a value buy? Well, like I said, the moat which is there, the competition which is there, and some of them are actually monopolies in the product which they're dealing with, especially in semiconductors and semiconductor-related services they're providing. And you look at their supply chain, it makes a lot of sense. That said, I would love it if you study it yourself and deep dive. These companies are there. They're these price points for a very long time. So I rather that you study and understand it before you venture and buy it than just based on something we are saying, diving into it. What I want me to be is a point of inspiration, not a point of decision. Palani Sam 355 is saying more videos on Japanese stocks, please. Sure, today's video is another Japanese company I want to be talking about. Kevin Prasan 7320 and Karthikeyan J2LN. Why do you insist on $500 monthly minimum to invest in the US market? Well, sitting in India, if you look at it, the conversion and everything put together, the remittance, I should actually probably do a video about this to show the calculation, how it works. Then only you really start looking at returns that make sense. So keep that in mind. We're sitting in India, sending money out, the conversion, the cost, the tax, everything put together, it should fundamentally make sense. Otherwise, you might as well take that money and invest it in India itself, where you'll see better returns. As an investor, what we always pay attention to is capital appreciation. That is what fundamentally we should always be looking at, not where we are putting the money. That doesn't matter. As long as it's secure and sound and giving us the best option for our capital, that is what we should always be paying attention to. Then under valuation, stock specific questions, Raja Vignesh 6139 and Anonymous. AMD intrinsic value is $135, P is 90 plus Y. Do a comparison to NVIDIA. I think I've already done a video on this. So do see that video and see. I'm never saying you should buy it. I'm not saying you should not buy it. What I'm saying is investigate and see if it is of value and if it is at the right price. If it's not in the right price, then it should definitely be on your watch list since you've done the investigation, and then look at buying it when the market corrects. Will Pro, what's your view on Renaissance Electronics? Why the share price is lagging? Well, I did speak about it. Why share price is lagging? That's Mr. Market's choice. Why does it inflate something like a Tesla or an Nvidia to astronomical levels when it doesn't make sense? When Nvidia's price only makes sense if it's doing world domination. So you have to keep that in mind. We cannot control why prices go down or prices go up. But you should look at it the other way. When prices are lagging, it is an opportunity for you to pick these stocks up. This is why we have in India, Anand daily talks about Patas list. And even in my Tiffin Coffee range, I talk about what we're looking at every day, because these companies are being ignored and we're picking them up. Some of the companies which we were looking at 6 months ago are slowly reaching points where we can't afford to buy them anymore. So we had 6 months to accumulate them. That is a way to look at it. A1, 1A, 1R7. Wow, I love you guys. The names are like incredible. What's your view on United Health and Hood and bull market stock? Well, I think I should do a video on the United Health and Hood. So let me do that on another day. But the stocks are good. You should study their valuations and see if it makes sense right now. Stock video request suggestions. Raja Vignesh, focus on only one-tooth companies per video for deeper insight, non-number dumping. Well, I'm sorry, Rajesh Vignesh, that I have done number dumping. That wasn't my intent. I sometimes talk sectoral. When I talk sectoral, I like to talk about a broad range of stocks, like what I did with the alcohol. So that is the case in that. Otherwise, most times, like today's video, is purely on one stock or one company I'm talking about. So I do try to mix it up and keep it fresh. I'm sorry that the few videos you did see are the ones I was dumping and number dumping and not giving you single one or two company. Suggest McDonalds and Dominoes because Gates and Buffett backed them. You're suggesting I do videos on those? I will. I'll take them up. Love the Honda battery tech explanation. More like that. Okay, I will do more like that, Viraj. He's given a lot of comments, so I'm trying to answer them. Frontman speaking. Adventist info. 9K, 93K AT machines for chips. Worth mentioning. Okay. Maria Philip 2. Like your company picks. Added to watch list. Thank you, Maria. I'm glad it's on your watch list. But like I said, if the price makes sense, invest. Do not invest just because it's on your list. Melvin Lodres 151. Keep this explanation style. Don't worry about over smart comments. Well, thank you, Melvin. I'm not worried about anything actually. And most times I'm pretty chill. It takes a lot for me to get rattled. Vishal Mohan L5X. Please include ticker names for ETFs in future videos. I will try and do that in future videos. Mutual fund bond strategy. Vinod Narayanan. Is BlackRock mutual fund good or good to buy? Well, BlackRock is a great company. I don't know which fund you're talking about. You need to be a little more specific. So the next video drop in specifically which one you're talking about and I will let you know. TCR investor. I accumulated liquid funds till 1 lakh, then buy bonds. Thoughts? Yes, you can accumulate in any shape or form the 1 lakh and then buy the bonds. You can even just keep it in your account and save and also buy. I tend to go to the Nifty 50 passive index fund. I keep putting spare change in the Nifty 50 and when that reaches the threshold of 1 lakh, I liquidate and move it to bonds. So each one to their own. Whichever way works for you is great as long as you're investing. I'm happy to hear that. Suggested response. Okay. The rest of it all suggestions for me and lots of thank yous. Okay. So anyway, I hope that covers most of the questions. If you have any more questions, please do drop them in and I will answer it in the next video. This video's comments I'll answer in the next one. Today I wanted to talk about a company which started way back in 1889. It started as a humble playing card company in Kyoto, started by a man named Fujaryo Yamayuchi. So this man started this company, and the name of the company, of course, is Nintendo. Nintendo I wanted to talk about because since the release of the Switch and the sales numbers are looking great, a lot of people are talking about if we should be buying Nintendo. So I thought we'll dive into Nintendo, the scene behind gaming, and is gaming industry something you should be investing in? Is there a future on it? Will Nintendo Switch 2 be another revolution like Nintendo Switch was? First of all, you must remember Nintendo is just not a gaming console company. It's a global phenomenon. And Those of you who are younger will definitely know this. Those of you who are older will also should know this, because a lot of Nintendo's people who do buy are parents who are nostalgic of the brand, and they are also consumers of this brand. So Nintendo crosses generations and crosses ages, and it is permeated into the zeitgeist of today's generation. So I know most of you know about the games, you know about the consoles, so I want to talk about the bigger picture. The global gaming industry is around the size of $184 billion, out of which $90 billion is mobile. PC contributes around $40 billion, while console games is around $54 billion, which is around 29%, out of which Nintendo, or console gaming, controls around 25%. The top three are Sony, of course, and Xbox and Nintendo. The question remains, now that Xbox has launched the ROG Xbox Ally and the ROG Xbox Ally X, and with the partnership with Asus, it offering PC and Xbox games and a handheld console. Are we in another console war? Like what is happening between PlayStation and Xbox? Well, I don't think we are in a console war situation, because the two both may be in the gaming space, both may be consoles handheld, but the target audience both of them are looking at are completely varied. And the Nintendo audience is a family friendly, and they own some exclusives, IPs, intellectual properties such as Mario, Zelda, Animal Crossing, Pokemon, and I think that worlds apart. The Nintendo audience and the Xbox audience are not in the same realm. I would say, if anything, the Xbox handheld would be more towards Steam, and those handheld devices would be the ones who will be feeling the pinch, and not Nintendo. I would love your comments. What do you think? Am I right or am I wrong? What do you think? Because I believe Nintendo has a classic moat, because these are restaurant characters in these games. They are a multi-billion-dollar franchisee. We saw with the Mario movie what was happening. Now there's a new Zelda movie coming out, and the theme park also being planned. And the secret of Nintendo is their ability to combine their IP, their tech, and this nostalgia which their brand seems to have captured the minds of consumers. So now with the Nintendo Switch, there's a huge pent-up demand for them, and it is backward compatible, and there's a massive upside to 50 to 60% if bought at the right price, is what people are saying. And that is where the $1 million question is. Is Nintendo at this current price worth buying? Currently, it's trading as an ADR in the US. That is, each ADR is a quarter of a Nintendo share. So in Japan, it's trading around $80. In the US, it's around $20. So currently, it's 20. The discounted cash flow puts it at 17. The relative is at $8, and the intrinsic value is at 30. So it's around 40% over its intrinsic value. And history, if you look at it the last 5 years, it's looking a little expensive right now. It's looking attractive. But the market capital is $97 billion, and dividend yield is 1.87, and the PE right now is at 44. The funny thing was, it was a tremendous value a few years back. A lot of people were not looking at. In 2022, the PE was 14. 2023, the PE was 18, and now it shot up to 44. So why is the question. This is what a lot of people are excited about. Because if you look at terms of revenue, if you look at in 2021 was 12, then it dropped down in 2024 to 8 billion, and then now it's projected to go to around $14 billion this year. So is this the right price to buy is the question. Has the market already baked in the future earnings of this company from Nintendo 2? Or do you feel Nintendo 2 future is going to be like Nintendo Switch, the first edition, and the next year or so there's going to be tremendous growth in Nintendo, is a question that you have to answer. So is the potential upside up to 50 to 60% already achieved, or is it yet to be achieved, is the question which is left us pondering. So that if you answer, then you'll be able to say if this current price of Nintendo is justified. So anyway, I hope you found this video informative and entertaining as always. I did manage to do this remotely and record it for you, so I'm happy about that. I do hope you had a wonderful day and a wonderful evening. See you tomorrow, where I wanted to talk about another vice industry. I wanted to talk about tobacco and international tobacco, and if you should be investing in them. Thank you for watching Dirish today, and I wish you a wonderful evening.